Hello everyone, and welcome back to Explain the Charts. Today, we're taking an in-depth look at Alphabet Incorporated, ticker symbol Google, a stock that has seen significant action recently. The current date is July 28, 2025, and market participants are still processing the latest developments. First, let's consider the recent news that's driving much of GOOGL's price action. Alphabet reported robust financial results for its second quarter of 2025 on July 23, exceeding analyst expectations. This positive earnings surprise was a major catalyst, coming at a time when the broader S&P 500 and Nasdaq indices were already hitting record highs. Wall Street analysts, based on reports over the last 12 months, hold a moderate by consensus rating on Google. Their collective average 12-month price target is $215.19, with a high prediction of $245 and a low of $171. This suggests a significant upside potential of nearly 12% from previous levels, despite some recent downgrades within the past 90 days. Now, let's turn our attention to the daily chart to see how this news has translated into price movements. If we specifically zoom into the period around the Q2 2025 earnings release, we can observe a dramatic event. On July 23, 2025, Google closed at 190.23, but the very next day, July 24th, the stock opened significantly higher at 197.03. This massive gap up of nearly $7 was a direct market reaction to the stellar earnings report. However, what followed was equally significant. Despite touching a high of 197.95, heavy selling pressure pushed the price down to close at 192.17 on that same day. This indicates that while the initial reaction was euphoric, there was quick profit-taking or underlying concerns that capped the upward momentum. The selling continued into July 25th, with Google closing lower again at 193.18, forming a clear reversal from the earnings high. This pattern of a gap up followed by a swift retracement is often seen when good news is bought on rumor, sold on fact, or when a significant resistance level is encountered. The volume during these 2 days was substantially higher than average, confirming strong institutional activity and a definitive market reaction. The price currently hovers around 193.18, pulling back from that 197.95 resistance level. To truly understand the intraday dynamics of this earnings reaction, let's switch to the 15-minute chart and focus on July 24th. Here, we can clearly see the dramatic candle that represents the market open after the earnings announcement. Looking specifically at the candle starting at 13:28 Universal Time coordinated on July 24th, we observe the open at 197.00, and it quickly surged to its daily high of 197.95. This short period captured the peak of post-earnings enthusiasm. However, within that very same 15-minute interval, the price was aggressively sold off, plummeting to a low of 193.74 and closing at 194.18. The massive volume of nearly 13 million shares traded during this single 15-minute candle highlights the intensity of the buying and subsequent selling pressure. This rapid whipsaw motion confirms that while the earnings were impressive, a significant portion of the market saw the high as an opportunity to exit, establishing short-term resistance. Now, let's step back to the daily chart to view GOOGL's broader trend from March 2024 to the present. Overall, Google has been in a strong uptrend, marked by higher highs and higher lows. We can identify a significant support zone around the 170 to 172 level, which acted as a robust base after a major upward move in late April 2024. The 185 to 186 range has also served as a midterm support, with prices bouncing from there multiple times in early July 2025. On the resistance side, the recent high near 197.95 is a crucial level to watch, as it quickly rejected further upside. Prior to this, The 200 to 202 zone was a notable resistance in late January 2025, and the 52-week high stands at 207.05, representing the ultimate overhead resistance. The uptrend has been generally consistent, but the sharp moves around earnings, especially the recent one, introduce considerable volatility that needs careful management. Switching to the 1-hour chart, let's examine GOGL's behavior during a less eventful period in early July, specifically from July 7th to July 15th. During this time, Google exhibited more contained intraday movements, consolidating within a tighter range. We can see a clear pattern of bounces off the 173 to 174 support level and resistance around 177 to 178. Notice how volume tends to increase during larger price swings, even on this shorter time frame, indicating active participation. This chart provides a good baseline for GOGL's typical volatility and responsiveness to smaller catalysts before the recent major earnings news. It helps us understand the baseline behavior of the stock and identify more localized support and resistance zones that come into play during normal trading days. For instance, the price repeatedly found support around 174.00, confirming its significance in the short term. Returning to the daily chart, let's assess the current levels and what they mean for the immediate future. After the earnings-induced volatility, Google has retreated from its 197.95 peak and is currently trading around the 193.18 level. This level is significant as it aligns with previous minor resistance turned support earlier in July. For short-term traders, the 190 to 191 zone provides immediate support to watch. A break below this could signal further retracement towards the 185 to 186 area, which has held as a stronger support level. Conversely, for a bullish resurgence, Google needs to reclaim and hold above the 195 level, ideally breaking the 197.95 earnings high. The current sentiment appears cautious after the sharp rejection from the highs, but the underlying positive earnings report provides a bullish long-term narrative. Focusing on the 15-minute chart again for the last few days of July, we can see the ongoing struggle. Following the significant drop on July 24th, Google has largely consolidated in the 192 to 194 range. High transaction counts persist, indicating continued active trading and uncertainty. Short-term traders should pay close attention to the intraday highs and lows within this consolidation. A sustained break above 194.50 on increased volume could signal a short-term bullish reversal, potentially targeting the 196 to 197 levels. However, a break below 192.00 would confirm the bearish pressure and could lead to a test of lower supports, perhaps towards 190.00 or even 188.00. The high frequency of transactions even within small price movements indicates a very active market attempting to find a new equilibrium after the big news event. To recap the important price levels for Google, remember the crucial support at 185 to 186 and the stronger long-term support around 170 to 172. On the upside, the immediate resistance is the recent earnings high of 197.95, followed by previous highs in the 200 to 202 range, and then the 52-week high of 207.05. For predictions, a sustained break above 197.95 is likely to reinforce bullish sentiment, with an estimated 60% chance to retest the 200 to 202 range if market-wide tech momentum holds. A failure to hold 190.00 support, however, would likely trigger a retest of 185 to 186, with about a 40% likelihood, especially if broader market sentiment sours or new regulatory concerns emerge. What to look for next? Keep an eye on overall tech sector performance and any new developments in AI, which is a key driver for Google. Additionally, Monitoring the volume accompanying any price movements will be crucial. High volume on breaks of key levels provides stronger confirmation. Finally, continue to monitor broader economic indicators and any shifts in analyst ratings that could further influence GOOGL's trajectory. Thank you for watching this in-depth analysis on Explain the Charts, and we wish you successful trading.